Thank you everyone for joining me this afternoon. I appreciate it. My conversation with everyone will be a little bit different today, focusing more on the insurance aspect of things and a slightly different detail approach. But when I was preparing for this today, I realized that it's kind of unique to talk about something and anything that is not related to COVID. It seems like that has completely taken over our lives lately. But I realize that, in fact, this actually is incredibly applicable to what we're all dealing with right now. If you have the type of business where your employees can work from home, you have now taken your office and you have dispersed it into an uncontrolled environment, whether that be the laptops that they're using or the personal information that they have laying on their desk/bed at home, as I tend to use sometimes. So we've dispersed that out into a way that I don't think any of us predicted, not to mention that all of us are very distracted from a business standpoint right now, and criminals are taking advantage of that and taking advantage of the fact that we are not paying as much attention. I saw an article that in Italy, the Social Security department in Italy has already been hacked, and right when people were applying for benefits and other aspects. So those countries, and including the U.S., we're already starting to see major increases in what the outcome of this could be. So even though it may not be as applicable as some of the other COVID conversations we've been having, I do think it is very pertinent, and it is very important that we all keep our eye on this as we move through these times together. So switching over to the insurance aspect of it. So these policies generally are called cyber liability insurance. They have some more formal names. They started around the 1990s when internet really was becoming more prevalent. And it actually arose from the first place when a couple clients got involved in online banking. And that was where they first saw the risk arise. And it's developed from that point in time into the world we know now, where every client, every business, every vertical has some element of electronic exposure to it. The tricky thing about these policies is that there is no standard form. In the insurance world, there is a basic policy form that if you use that form, called the Insurance Services Offices, the ISO forms, with relative certainty, you know what you're getting. There's endorsements, but the basic form is the same. That is not true on cyber. There is not a standard form out there. So everyone is different. There are hundreds of carriers that are involved in this, and you have to really focus on what does your policy have and what are you getting from that policy. They can be built into the coverage forms for other components, or they can be a standalone policy depending on what approach you have taken. So main piece of this is that cyber insurance is not an all risks policy covering anything that's vaguely related to the internet. Many clients think that I have a policy and therefore anything that happens to me is going to be covered, but that is far, far from the case. For one thing, it doesn't have to be electronic. It can be something that is paper. I have a customer that I worked with that lost a backup tape. And yes, that's dating me a little bit. This was back when still we took backup tapes off-site to be stored. But they took the backup tape and one of the tapes got lost. They don't have any reason to believe that it was malintent or that anyone took it for bad reasons, but it was gone. And that actually triggers breach and notification requirements under some of the things that we're going to talk about later. So don't fall into the trap also that this just has to be something that's electronic, something that's internet-based. It can be paper, it can be electronic, or it can be other types of data. And the biggest thing is that all policies are not created equal. So just because you have a policy doesn't mean it's going to cover everything. And I think that's probably one of our big takeaways today, is you really have to know what's in that form and understand it. An insurance policy usually has two types of approaches. It's either a first-party policy or a third-party policy. And when I say first-party, think of the cost that you would incur to get yourself back to a point before. So the most common first-party coverage is property insurance. You own a building, you buy insurance on it, it burns down, they pay you to rebuild your building. A third-party liability coverage would be something that you are liable for where someone sues you and you incur costs because of damage you caused to someone else. In the insurance world, those are usually two complete separate categories, but on this policy form for cyber, they are almost always combined, which makes it a little bit unique. And we're going to go into more detail on what each one of those kind of mean. So first-party coverage, there's some things on the screen there, but just to talk general, it's a lot of the things that he was talking about before, the forensic costs. So to figure out if you have a breach, what did they do? How far did they get in? How bad was it? All of those require forensic analysts to get involved with them. One area that we have seen a huge increase in lately is cyber extortion, so ransom. They lock down your system and they want a ransom cost to be able to get it back. They can actually, the policies pay for that ransom coverage. Public relations expenses, restoring your data, getting that back up to the point where you were before. Business interruption is one that we have seen tremendously take off lately. So if you come in and your systems are locked down and you can't operate, or something else happens that prevents you from generating revenue, you need money in order to keep operating your business. And a business interruption endorsement on the cyber policies will actually pay you money that you would have lost during that downtime. The most common one that people hear and think about in this category of first-party coverages is the cost to notify and provide credit monitoring. I'm sure everyone on the webinar has been affected either through the Target component that happened a few years ago, Equifax, TJ Maxx, one of the other big companies that have been breached. You probably got a letter saying that your information could have been compromised and that you're going to be provided credit monitoring services if you take certain steps. The companies had to pay for that. We're going to talk a little bit more about that later, what those costs look like, but all of those costs are things that you would incur as a company and have to cover if you don't have insurance for it. Also, of course, the common one that comes to mind too is legal advice and expenses, because most of us don't know how to deal with these, how to find the best forensic person, how to walk ourselves through a breach. There's attorneys and firms that do that for us, and those costs can also be covered by the policy. Then you would shift over to the other side, which is third-party coverages. And again, these are costs that you would incur because of a wrong that you did to someone else or allegations that you did something incorrect. These are the breach of privacy or confidential information. Could be regulatory fines and penalties. In the state of Indiana in particular, there are actual definitions of personal identifying information, and there are steps that you must comply within a certain amount of time in order to acknowledge that there was a breach. And data breach laws, notification laws are being enforced by the Indiana Attorney General's office. We work closely with them in a couple ways, and that is something that they are taking very serious at the state level. And various other states have similar, actually almost all states, but I'll give you a tip for a poll later there. PCI compliance, so if you do any type of credit card transactions, there are certain regulations that you have to be in compliance with. It can actually cover some fines and penalties related to that. Errors and omissions, it's a very broad category, but it could be something as simple as you accidentally promote a webinar that your company is going to do, and you use someone's likeness or a quote from someone that maybe you didn't have authorization to do. You didn't do it intentionally, but it was still an error or an omission. Those types of things can be covered under the policy. I would say that in my personal experience, right now we're still seeing less of these for the small to middle-sized companies that exist in Indiana and in the surrounding areas. We really do see our clients getting much more hit with those first-party costs. But when and if there is a third-party allegation, they can be expensive and they can be severe. So this is the area where you really want to make sure that you're watching your limits as well. So those are the two basic pillars of the policy. I thought it might be good to take a couple minutes and just touch on a few areas that are specialties that can be in the policy, kind of partner with a policy or are emerging in that area. So the first one that I have on there is silent cyber. And silent cyber really has more to do with other policies than a cyber insurance policy, but it's knowing and understanding where your general liability policy could or could not respond if there were allegations. Same thing with a property policy. An example I like to use is if you have a data room that it's incredibly important that the servers stay at a certain temperature, and you control that through electronic devices. What if someone hacked into that and caused the temperature of the room to skyrocket, so all of your software and your hardware was damaged? Is that a cyber claim or is that a property claim? And do you understand how those two policies would and would not work in that circumstance? So understanding the silent cyber aspect. Bricking is a relatively new term to the insurance side of the world. It basically means the loss or use of functionality to the hardware itself. So historically, in a cyber policy, you would have coverage for the software and the data that was held. But if something happened and they hacked in and actually damaged all of the physical device, you had to pay for that yourself. We are now seeing carriers add coverage for bricking specifically to the policy, which would replace the hardware as well. Outside service providers coverage. This is something that you definitely want to look into to see if your policy includes this. If you are using an outside service provider, especially for cloud, and you have a lot of your data stored with another entity, you're not housing it on your own servers, you can actually endorse your policy to cover losses that affect you that happen to the outside service provider. So it's almost like a contingent coverage if you think about it in other insurance component words. It basically means that it didn't happen to me, but because it happened to those people, it affects me, and you can tap into some coverage there. This one is one that we see expanding quite a bit, and there's some questions you have to answer specific to your risk. It's not carte blanche usually, but it's something to definitely consider if you're using outside providers. Reputational harm is exactly what it sounds like. You know, the TJ Maxx, the Targets. Again, we hear about the big ones because the news media picks those up, but the exact same thing could happen to you in your local community. And what would the harm be if you were on your local news as a result of all of your employees' data was somehow hacked? And what would the ramifications to that be? The policy can actually help you spend some money to have some public relations improvement in the area and get back up to where you need to be prior to the incident. In social engineering, we're going to talk about this one in a lot more detail. It's a unique term that has come up somehow, and truthfully, I don't really know where it came from in the first place, but dictionary.com identifies it as the use of deception to manipulate individuals into divulging confidential or personal information to use for fraudulent purposes. So from an insurance perspective, what we say is that it basically when they dupe you into giving them something voluntarily, but you think you're doing it for goodwill. So classic example of that we have had recently, we have a customer that was doing some acquisitions, and they got an email. The CEO emailed the CFO and said, hey, I just finished up. It's a relatively small deal. We got the paperwork all signed. Can you go ahead and wire the money over to show some goodwill that we're going to sign everything up and finish tomorrow morning? So the CFO creates the wire per the instructions, sends it off, only to find out that that email actually did not come from the CEO. They had hacked in and made it appear that he was making the request. And we've seen this evolve over time. A lot of clients now have locked down on seeing that emails are external, right? You get the header on a lot of emails now that say it's an external email trying to address this specific issue. Doesn't have to be wiring money. It could be sending out W-2s. Hey, I'm going to be working this weekend. Can you shoot me over last year's W-2s so that I can take a look at things? It could be emailing out employee records. Hey, I'm getting ready to do my review on so-and-so. Can you send me their personal record? Any type of being duped into voluntarily parting with information falls under the social engineering category. The key to this is because it is voluntary parting, it's not someone else coming in and taking something from you as a traditional theft would be. It is supplemented under the policy. It actually used to not be covered, but the carriers have worked to develop specific coverage for it, subject to a supplement. And usually when there's a supplement on the policy, that means that it could get out of hand quickly, and the carriers believe that you should be controlling that and that you have the ability to control it. So when you see social engineering supplements, you will usually see about 100,000 to 250,000, which can sound like a lot until you start thinking about how much you wire at any one time or making other payments. And you can buy excess limits over that. The one thing I would point out on this too is that this policy, the carriers from an insurance perspective haven't really decided where this is owned yet. Is it a crime or is it cyber? And so because of that, you see an overlap sometimes. And so check your crime if you buy crime insurance to see if there's anything for that as well. And then you want to be careful if you have both to watch out for that piece. So the social engineering is something that we have definitely seen tick up over time. One of our carriers that we partner with is Chubb Insurance. You can see this graph that they put together. So if you went back to 2009 and you baselined that everything in 2009 was equal in the type of insurance claims and activity related to cyber, since 2009, you can see the growth by type of claim. And social engineering has grown 2,000% compared to 2009. I think if you talk to any of our Gibson colleagues, all of us could probably give you an example of what has happened to one of our clients in this space. So it's an area that is very prevalent, happening very often, and it's affecting all of our clients, and most of them have a supplement. So back to what Jason was saying, there is a ton of great protocol that you can put in place to try and prevent that, but you want to make sure you have the insurance in place if it doesn't. And one other tip I want to throw out on that one of the more recent ones that we have seen, is the hackers actually figured out how to hack into the attachment of an email. So you think you have your emails locked down very securely, where my employees would know that that was not really an email from Jason. They know to look at the name. What has happened now is the hackers have figured that out, and they are taking it to the next level, and they're hacking into the email attachment and changing the wiring instructions on that aspect of it. And so just something to really watch out for there. If you're doing any wiring, make sure you have multiple protocols in place, phone calls, double checking with the vendor, calling directly. We'd be happy to talk about other risk management factors specific to that, but this is definitely a growing area of concern for all of us. All right, Steve, can we put up the next polling thing?
How many states have notification requirements in the event of a breach? 42, 47, all 50, or some other number? The poll is open. Back to you, Courtney.
Thank you very much. All right, so we've talked about what you can do to hopefully not get yourself into a situation with a breach. Jason covered that. I've talked a little bit about insurance and what it can do for you if you have the breach. So I'm going to spend a few minutes talking about what happens if you have the breach, and this is not a lesson on breach response planning. We do that separately. That's an entirely different presentation. This is just a very high level of some things to think about. What happens when you come in that morning and you can't get to your system at all? So before we move into that piece of it, this is the Indiana definition of personal identifiable information. And as you can see, it is extremely broad. It's any information that can be used to identify, contact, or locate a person. The other components of this, which I didn't put on the slide, is then there are multiple other categories that apply to non-personal information, but is also considered sensitive data. So when you're thinking about whether or not you've had a breach from a notification standpoint, you have to really think about what did you have and what could they get. So in today's world, again, if we have the ability, we're working remote, we've got laptops out there. What happens if one of those laptops disappears? Does your employee have any of their own personal information on there? How about your client's data? How about your internal company data? Any spreadsheets that have been saved on those disk drives? Those numbers can grow very, very quickly in terms of the number of records that you have that can be identifying as either a personal or corporation. So the answer is on there in the middle of the slide to our poll. All 50 states, plus the District of Columbia, Guam, Puerto Rico, and the U.S. Virgin Islands have some form of legislation that requires notification, at least on some level. When you have a data breach, there's really an immediacy that has to be addressed. This is not something that can be put on the shelf and dealt with next week when you have time. It's a crisis for your business. You have to figure out what's happened. And that can look a couple different ways. It can look that you came in today and you can't access any system. You can't run your machines. You can't do anything. Or it could be as simple as, ooh, we found out that this got hacked and they may have gotten to our employees' data. We don't really know. Either way, you have to take that serious and you have to treat it urgent because each of those states has different time frames that you must respond in. Some of them are actually as short as 72 hours. You have to begin the notification process. And so having a response plan and a phone number or a hotline, as we like to call it, on what to do in those situations is really critical. And we believe that the easiest way to do that is through an insurance policy because you're not only getting the indemnification back for your costs, but you're getting a free aspect of service to have a 1-800 number, you pick up the phone, and they walk you through what to do. We've had numerous situations where the client calls and says, I don't know what to do. We've had some where they've walked in and due to malware, their entire system was shut down. Production lines, they can't produce anything until they can get it up and running. They make the phone calls to us or trusted advisor, and we have a comfort level that we have hopefully worked with him to put some insurance in place and that they've listened to us, that this could happen, even to the small and medium-sized companies that are out there. And so what we do is we work with them, we pick up a phone. In a recent client that I worked with, we were on the phone with the nation's leading breach response plan in less than 2 hours after they knew that an event had happened. And they were walking them through whether or not this was a certain type of malware. They knew what had gone on. Ultimately, they worked with them from the forensics aspect and a breach coach, which is the name that they give the person that kind of takes charge when you have these circumstances. The breach coach walked them through and they identified that this one was a legitimate criminal, which is an interesting phrase, but that's what we use, and that if they paid the ransom, they could get their key back in order to access all of their systems. So working with the breach coach, they determined that it was legitimate. They were going to pay the ransom, and then they figured out through the breach coach assistance how to do that in the form of Bitcoin, because that's how most of these are transacting now. The criminals have found out that money is traceable, Bitcoin is not. And I don't know about you, but I wouldn't have a clue how to go find $500,000 of Bitcoin today. So luckily, that's what the breach coach is there to help walk them through. So it's the service aspect of it. It's the hotline to know exactly what to do when you get that terrible call or find out you've had a breach. And then obviously the most important from a financial standpoint is the indemnification of the funds. The other thing I would say is that we have been talking about what happens after the fact, but most insurance policies have some form of built-in risk management costs. Those can be as high as $25,000 to $50,000 of free risk management services, whether that's writing a breach response plan, working with an outside vendor to do testing, having them do an audit of your system to find weaknesses and security breaches that may have already happened. Those limits of risk management can be built into a policy that's as cheap as a few $1,000s. So it's a pretty good investment to have $1 million limit, spending a few thousand, plus the free risk management resources. But the key to those is you got to use them on the front end. They're always good on the back end after something happens and you've learned a lot. But really tapping into those and knowing how to take advantage of that policy before you have a loss is huge as well. All right, so Steve, I'm going to move into just a little bit about how people know if they need insurance aspects, but if you want to throw up the last poll and give us the answers there.
What is the average cost per record for notification? $10, $50, $100, $150.
All right, so we've got the poll going up there. I will go ahead and move through. So again, this section is going to talk just a little bit about, from an insurance perspective, do you have the risk? And what could it really look like for you? So this is, again, working with our partner, Chubb. This is taking a global look at a general classification of an average per incident loss. So when we talk with businesses, comparing yourself to a global other industry is probably not the most accurate comparison. But this just gives us a little bit of data to have a discussion around for now. So you can see that in this average number, credit monitoring, which you have to offer once you've had a breach of notification, averages out just under $200,000. The forensics piece, which is just the internal cost that you incur to figure out what happened and how to fix it, is about $115,000. Then you see the legal costs, the notification, and then the crisis response. What is interesting in this grouping is that you don't see liability costs that we talked about, so the actual indemnification to a third party. You also don't see ransom payments because those are not tracked and shared with third parties. So I would say those make up the real majority of other costs. But back to the polling question, we talked about the notification. Those come out to be about $85,000. The current estimated cost for a cost per record, so if you say that you have a breach of 100 records, how much is it per record? They're estimating right now about $150 per record. So you multiply that out. And that includes the actual cost, putting something in the mail, providing the monitoring, but also tracking it down, figuring out how to get a hold of these people and move through it. One point I want to make on this is, as I bring back to the global component, in working with our partner, Chubb, we have the ability to drill this answer down to industry and business size. And if anyone is interested in seeing that for your specific business, your specific industry size, meaning revenues, we'd love the opportunity to pull that out for you. So shoot me an email, my information's at the end, or put something in the chat, and we'll make sure that we get that right over to you. So again, this really focuses a lot on what Jason was saying as well, but some risk considerations. How reliant are you on your business's ability to access laptops, desktop computers? Do they use websites to buy your product? How many email addresses do you have? What about cloud systems? Your machining and your ability to produce your widgets. Do you need computer access to run the machines now? And what would happen if your business was taken down? How long would it take you to get up and running? It's amazing to me how quickly sometimes these guys can get back up, 2, 3, 5 days. But what would happen if your system went down 2 days before payroll and your system wasn't back up? Do you have the ability to start handwriting checks? Or are you going to have to tell your employees that they can't make payroll because you can't access your system? Think about what kind of personal and corporate information you're holding, both on your employees, your customer base, and the company itself, or your vendors that you do business with. If you're using outside providers, what type of indemnity agreements do you have in place? That's one thing that we work on a lot with our customers, is looking at those contracts and seeing really who's responsible for what aspect. And then how are you going to absorb those costs? We've, I think, shown that there's definitely going to be costs, whether they're hard costs or soft costs to your business. How are you going to absorb those if you don't have the insurance component to filter back in? And then just thought we would leave with 5 tips, because you said about 35%, I think it was, or 35 people have a policy out there, which is awesome. We are very excited to hear that. If you do, go pull your policy out and look at a couple of these specific things. You have at least $1 million. If you're talking about ransom, forensics, notification, and business interruption, $1 million goes really quickly in today's world. So make sure you have at least $1 million. Does it cover ransomware? And if it does cover losses related to that, will it actually pay the ransom? Or are you still required to pay the ransom, even if it covers the other components of it? Does it pay for the business interruption? And does it pay for reputational harm? What about for the equipment itself? Will it pay to replace that? Social engineering. Do you have a specific coverage for it? And if so, is the limit at least $250,000? And finally, do you have any warranties in the policy? This is something to really be careful for. A lot of policies have started putting in a warranty saying that I'll give you the coverage as long as you do these things. So one of them could be dual verification or phone call backup procedures. So before you wire money, do you have protocol in place that you'll do a phone call back? If you have a loss and you didn't do that, and it's a warranty on the policy, there is no coverage. So warranties and policies are something that you should definitely look out for. And the last thing is, I hear a lot from our clients when we're meeting with them and doing risk analysis that they will say, well, I don't need insurance because I have an outside service provider. They take care of all that for me. Or I'll hear someone say, well, I have insurance, so I don't need to worry about outsourcing it or taking care of any of those ideas that they can provide me, such as the password protectors and stuff. And really, I consider those two things, having an outside service provider and insurance, kind of like belt and suspenders. And if you don't want to get caught with your pants down, you take every step possible to make sure that that's not going to happen. So it's always best to have both and make sure that you're working with trusted partners that understand how the two fit together, and that when you have a loss, you've got your trusted advisors lined up and that they're going to walk you through that crisis. And thank you for your time. I'll take any other questions. If not, Steve, I'll turn it back over to you.
Despite being no standardization, are there any common requirements or gotchas for cyber insurance, such as being PCI DSS compliant or compliant with some standard in order to receive payout for claims?
Yeah, it's a great question. We actually do get that one a lot. The short answer is no, unless you've had a breach. In some cases, if you've had that specific issue, the carriers will really try to determine if you've made steps to become that way. But really what we have seen more than it be a requirement to get the coverage is that the underwriters might charge you a little bit more premium, or they may put sublimits on those components. So for example, if you're in a credit processing required job and you are not PCI compliant, they may put a sublimit on how much they would pay you for the fines related to that, but they'll still cover the losses that arise from that because they understand that the risk is there even more so if you're not in those categories of compliance. But it is not usually a prerequisite to get the coverage. If anything, it's a reason to get the coverage. So our home office is in South Bend, but we have offices throughout Indiana in South Bend, Plymouth, Indianapolis, Fort Wayne, as well as Kalamazoo, Michigan. So we overlap very closely to the Network Solutions footprint.